Well, in today's Money Mondays, mortgage rates are expected to rise this year as homeowners are rushing to refinance their homes while rates are still near historic lows. Some folks are saving hundreds of dollars each month. I'm one of them, while others are chopping years off of their mortgages by converting to a 15-year term. It's a great deal for most homeowners, but who benefits and where do you start? Joining us is Banker Boggs, Executive Vice President at First National Bank and Trust. Hi, James.
Hi, Heather.
Happy Monday to you.
Absolutely. Good to be back.
Yes, good to have you back. Let's talk about these lower interest rates. If you do lower your interest rates, how much can that really benefit you on your monthly payments?
The rate itself is important, but also if a consumer's been in their house for a long time, the amortization period can be stretched out and can really help. I think the key, though, is working with a lender that you can talk to, because it's always not about the rate. Sometimes there's hidden fees with the lower rate.
Hidden fees. I found that out in the larger companies, and I actually learned, will help you if you haven't refinanced yet, local banks actually have lower rates. So how do we determine whether or not a refinance really makes sense?
Great question. The easiest way to do that is to understand the break-even cost, and that's a function of the refinance cost, very similar to the upfront costs at the time of a purchase.
Okay, so what should the break-even point be? And really, how do you figure that out?
It's a great way to just apply the cost of the refinance and divide that by the monthly savings. So for example, if it's going to cost a consumer $1,000 to refinance and they're going to save $100 on their monthly payment, then in 10 months they'll break even.
Yeah, but $1,000, I don't see that happening.
No,
You could actually save a lot more than that. So if refinancing does make sense, then how do you start?
The whole key is to really have your tax returns ready, be ready to get a copy of your last 2 pay stubs from your HR department. A lot of those are online. Have your insurance stub ready. I would reach out to somebody, maybe get a couple quotes, but more importantly, now's the time.
Now is definitely the time because interest rates could be going up. Tell us about that.
Yeah, so it's really a function of the Fed and the Fed policies. A lot of people believe, at least through early 2022, that they'll keep rates where they are. You never know about economic factors. Foreign factors could also play into effect. But I think the whole key is there's no better time than now. Rates really can't get any lower. They may tick up a quarter a point here or a half a point there, but for the most part, boy, they sure can't go any lower than they already are now.
So how can your bank help with refinancing? What do people do? Do they call you? Do they come in? What's the process?
Heather, a lot of the process is either on the phone, speaking to one of our mortgage experts, and at First National Bank, we have an easy process where they can apply online. I think the whole key is just to feel comfortable. If you have your tax return, your pay stub, your insurance, then if you can talk to somebody and really understand the difference between just a low rate with maybe hidden fees, or look at the entire package of rate and fees. And you touched on it too. So many people can go in this environment from a 30-year to a 15-year, and you're going to instantly break even, and that's really the best for a lot of people and their family.
It takes a lot off your plate for sure.
It sure does, and we're excited to be there to help people, and they can visit our website. And next week, we're going to have some tips for first-time home buyers.
Awesome. Okay, that'll be great tips as well. Banker Boggs, thanks for joining us. James Boggs with First National Bank and Trust. And for more information, you can visit fnbokla.bank.